That's dope. That's dope.
What is up, everybody? It is Friday, August 20th, 2 p.m. here in sunny Florida. A week after Friday the 13th. Nothing bad happened last week, thank goodness. Hope you guys are all having an amazing day. This is Bullish on Bitcoin. Every single Friday we do this. I have on guests and we talk Bitcoin endlessly, or at least for about 1 hour. I have two amazing guests on today. Neither of them need any introduction, but we'll give them one. Still waiting for one of them to get connected. But first, I have Sam Trabucco. You guys all know him. He is the co-CEO of Alameda Research. You know his partner, of course. Is that correct? Co-founder, co-CEO. Is that a correct title for you?
Co-CEO is correct, yes. I did not.
Co-CEO. And affiliated, obviously, with FTX. We all know what FTX has been doing to absolutely drive mainstream adoption of crypto. I think everybody is a fan watching from the sidelines and cheering on every new announcement that you guys seem to have on a regular basis, from Miami arenas to Major League Baseball, Mr. Wonderful, and, of course, Tom Brady. So how are you doing today, man?
Good. Yeah, I should note that, strictly speaking, like I'm the CEO of Alameda. Don't work for FTX in any official capacity. But yeah, I'm good.
Affiliated.
Yeah. Just want to be explicit.
And Tone is here as well. I see he's having some problems getting connected. We could try, but he's blank there. So you and I will start talking until I see his face pop up. But the other guest is Tone Vays, who also needs no introduction. And here he is. He's coming in right now. I don't know if you can see us, but hi, Tone. How are you, man?
I got it. Can you guys hear me though?
Yeah, we can hear you. Sound great.
Hold on. Should be better. No. Should be better. Audio should be better now.
It's fine. So, Tone, I found out you went to Florida State, man. I grew up in Gainesville, Florida. I'm a Gator fan. Is that a problem?
Nice. Maybe.
I guess we'll see throughout. So first, guys, Tone, I'll ask you first. I know your pinned tweet says Bitcoin's going to 100K this year, right? So clearly you're feeling bullish. Is that still a sentiment that you share?
Yeah, that remains my sentiment. I think I tweeted that out around March, around like April or something, or before that, maybe back in March. It was a little while ago. And yeah, I still feel that way. I always saw this current year, since the very beginning of the year, as a 2013 style year with two big pumps. So I expected the price to go up to somewhere between 45,000 and 75,000 for the first half, followed by a 40 to 50% correction, which we had. And now I'm anticipating somewhere between 100 to 150,000 for the second top, taking place either probably next year, and we're going to close the year around that $100,000 vicinity on an up trajectory. So that's what I'm looking for at the moment.
It's funny. A lot of people look at us like we're crazy when we talk about $100,000 Bitcoin or six-figure Bitcoin, but it's a mere 2x from here. I think the number just scares people, but when you look at it on a percentage basis, that's a very small move really for Bitcoin relative to what it's done in past years. Sam, I know that you guys obviously we're talking about getting long around 30,000 right at the bottom. No mystery that you guys did that. Where do you stand now?
Yeah, I mean, so we're never making claims like there are specific prices that we think are coming, or long term. We really don't have any kinds of we don't feel that it's that the market structure lets you make really specific claims like that with any kind of like mathematical reasoning, at least not that we've found. We like the things we do tend to be a little more opportunistic. And like look for opportunities which like have been borne out before in like sort of specific ways. So yeah, when Bitcoin fell to 30K, there were certain features of market structure which sort of like inform you that it's quite likely that it's going to rebound fairly fast. And yeah, we can maybe go into some of that. But yeah, that was a pretty good spot for us to recognize like, oh, there's really just no way, or there's no way that the expected value of this trade is not like pretty good to get longer. And yeah, we've not taken that off. It's like some features of markets where we feel pretty good about like holding long positions, or like really any positions, but in particular long ones, are where we feel that it's like fairly likely that like if, for instance, Bitcoin did go up a little bit right now, it would go up like a lot versus where if it went down a little bit right now, we think it would, and that's mostly because of how rampant liquidations are in the space. When you're like near a local max, as we sort of call it, right now we're at 50K. We haven't been at this level in some time. There's a decent number of like people who have opened up short positions, and if Bitcoin goes up a little bit, those shorts can get liquidated, which sort of creates an asymmetry in the expected value of potential moves. And that's not the case that if we go down a little bit, it's likely to have the same effect because we've been at those levels very recently, and the amount of time that there's been for people to get short, to get longer in levered ways has been like much lower in ways that would cause them to be liquidated. So right now, when we're at like a local max like this, we feel pretty good about being like not like taking off these long positions that we have.
Talk about what those ideas were and the indicators were that you were seeing a bottom in that 30,000, 29,000 area.
So the reason that it went to like the same effect I just described is kind of what happened, where yes, like there was some organic reason for Bitcoin to fall, at least in the very short term. There was like a bunch of bad news. There was I'm forgetting exactly which cycle of bad news this happened during. There have been so many of them. I believe it was one of the China things. There was like bad news
China banning mining and Elon Musk hating mining.
So there was like some organic reason for Bitcoin to fall short term. Argue about like whether that made sense or not, but it does seem like there was like a bunch of negative stuff going on, at least in some people's eyes, and that caused Bitcoin to fall a bit. And this was closer to a local minimum instead of a local maximum, I guess. And so like a bunch of people had gotten really long, especially on leverage, in like the months leading up to this when we like got up to like 65K or whatever. You can see that like the Binance Bitcoin perpetuals open interest got really, really high during this period. And so like a ton of this was on leverage. And then Bitcoin fell somewhat, again, like hard to say why, but it kept like, and then it was like sort of kept falling and falling due to like things like Elon Musk's losing support, China. And then, it sort of fell like to like below a certain point, and then it started getting liquidated really, really quickly. It fell like below 30K very, very fast, if you guys remember. And this was all because of liquidations. No one wanted to sell below 30K. So like that's the sort of the kind of thing we're looking for. We look for spots where it gets to a price that no one wanted it to, and we take the opposite side like very, very aggressively. Because that's the sort of the kind of thing where you can tell it's gonna revert fairly fast. That's something we're always looking for.
Yeah, that makes perfect sense. So that said, Tone, I'll ask you first. Do you think the bottom is in on this move?
I do think the $30,000 area was a local bottom. I personally, you have to time the markets, right? So going into the year, I was anticipating, like I said, a top somewhere between 45 and like 75. At the time that the top happened, I was actually still bullish, expecting more. I mean, that's kind of how I trade. When prices go down, I'm continue to be bearish. When prices are going up, I continue to be bullish until signs tell you otherwise. So same thing here. At the moment of the reversal, I thought that there would be a short-term reversal up into a couple of moving averages, and then still making one more low this summer around 25. That didn't happen. The market turned, and once we started to go up above 35, I became a bull after that. So I do think the bottom is certainly in. I've allocated back 100% into bullish Bitcoin, and I remain 100% allocation bullish Bitcoin for now, and we'll see where the top comes.
Okay, so do either of you have either a line on the chart or a fundamental indicator of if that would change? Like, is there a price now where we can drop or something that can happen where you believe that we could potentially be going down lower? Sam?
We're not really looking at specific prices for that kind of thing. We're mostly looking at like various like quantitative indication, like we're always tracking like the open interest of the contracts. We're tracking like the premium at which various derivatives are trading relative to spot. And that's sort of the kind of thing that can tell you like, it doesn't exactly tell you like, oh, like there's like a ton of buying interest or selling interest coming up, but it can tell you like what kind of flow is driving various price movements. Like as Bitcoin's been rising, we've like sort of been trying to figure out like, oh, like why is it rising? Like, and that can like give you information about like some of the like potential for the moves to get undone by liquidations or not. One thing we've noticed recently is that a lot of the net flow has been in like on some of the products that are less prone to liquidations, and which would make you think that some of the moves are like less likely to get undone than the initial rally to 65 was. Yeah, it was pretty likely that was going to get undone because of how high leverage it was driven by. And I think that like there's a decent amount less potential for that to happen this time. But yeah, so that's the kind of thing we're looking for. We're also like trying to track like short-term sentiment. I think the crypto markets are like probably a little bit too driven short-term by overreaction to news. And like one thing we often see is that like there'll be a big reaction initially to news, and then it will like sort of undo itself a little bit. And yeah, so we're always trying to get ahead of that kind of thing, understand what the market's going to do short term, and like sort of do it first. But yeah, longer term, we don't have any like specific price numbers in mind.
Yeah, I mean, the drop from 60 to 50 liquidated, 10 billion and a million individual accounts. Yeah. We haven't seen anything like that even on the way up from 30 to 48, right? So it really is pretty telling. Tone, is there something that you're looking for that would invalidate your idea that we're continuing up?
It'll be pretty rough. I can throw a chart up.
Sure. If you go ahead and share your screen, I'm happy to share it.
Here, I can do a window. There you go. Share. All right, cool.
Yeah, cool. I can bring that up. There you go.
All right. Oh, perfect. All right. So, man, to invalidate, it's going to be rough. I'm going to need several weeks of weekly candles below these two moving averages. So I would need several weeks below 40,000. Now, of course, prices can move quick. So it's either several weeks below 40,000 or a single week below 35,000. So that's a pretty big move down. And it's interesting what we just said. Like, I don't have the resources to do that kind of fundamental analysis. So I depend on chart patterns and technical analysis, because all the guys that are doing that kind of in-depth research, they're going to be buying and selling, and that tells me what the prices are doing. So this is why the at-home trader is not able to compete on real fundamental analysis. I do rely on my friend Willy Woo and his fundamental analysis for on-chain stuff. But other than that, I trust the price action because that tells me everything I usually need to know. And right now, to invalidate, it's going to be hard. Even on a daily scale, right now, I would need a full reversal and take out the latest swing low. I'm looking at the daily chart, and this is what I mean by that $30,000 price. I was looking at two things. I don't like consolidation at the bottom. To me, a consolidation at the bottom tends to lead to lower prices. But my own indicator has this green arrow here, and this green arrow appeared that at the first tick of the candle. It didn't go there retroactively. So I was bullish on this day, but I wasn't long-term bullish on that day. I thought that it was going to be more short-term and then probably more down, but the buy signal is a buy signal and then turn into a full-blown up move. And now we have a continuation of higher highs and higher lows. And as long as that continues, I don't really see anything that can deter it other than breaking the prior swing lows. So on a daily scale, I would need a sustained close below 44,000 and then another full candle below it. And even then, I have awesome support at around 42,000. So there would need to be some serious downside to reverse this bull trend. I'm pretty damn bullish right now.
Yeah, I think everybody generally is kind of feeling that way at the moment. So we've brought up the news a couple times. So obviously, I think it's clear that none of us believe that the news is what drove the price, right? That the news somewhat comes afterwards as a reaction. And we always see those same stories you guys just talked about. China always bans crypto. India bans. We talk about hacking and ransomware, energy every time Bitcoin price drops, right?
But
So that
there
said,
were a couple of real reasons around that time. One of them was throughout Q3 and Q4 of 2020, Grayscale was buying twice the amount of daily mined supply of Bitcoin because of the arbitrage trade of trading GBTC for premium. Around February, March of the year, that premium dried up because there was so much new GBTC shares created that all of a sudden Grayscale stopped buying any Bitcoin. People were no longer able to arbitrage that trade. So that's huge buying demand disappeared while selling pressure began, which is the ban of Chinese miners forced the Chinese mining operations to move their miners out, and that costs money. So probably a lot of Bitcoin was being sold to move the mining operation while the biggest buyer of that Bitcoin, Grayscale, stopped buying.
yeah, okay. So that makes sense. It's definitely a theory, but I'm curious, do you think that for the mainstream to be interested again to see the continued prices to 100K targets above, do you think that we're going to see some sort of news catalyst that could send price up, and what kind of catalyst would you be looking for?
I mean, we're seeing it now. It's the complete division of society between the vaccinated and the unvaccinated, and it's causing the complete shutdown of borders. It's causing, preventing people from leaving. Like Australia is just locked down. You can't enter the country. You can't leave the country. I see continued stress on the European Union. I see continued stress on the United States between like a war between, say, Florida, Texas, and the federal government, and these kinds of restrictions could cause a lot of economic pain. And people like eventually, when a government can't get their way, they do it with money. They're like, you know what, screw you, I'm right, you can't access your money anymore. And I think these catalysts are coming any day. Not to mention more inflation news. Well, like all of these things are happening at once. And I think that those are going to be the main catalyst, the fact that Bitcoin is unstoppable way to access your money, as the governments are going to, if they can't get their way in keeping you, in controlling you with their, vaccine passports, they're going to go after your money.
And Sam, do you think that there's, obviously we saw the price move from 20,000 to 40,000, 42,000 or so. We had this long consolidation. Then it was the Tesla news, right? 1.5 billion price rocketed. Do you think that we're awaiting a catalyst, or do you think that we don't need it?
So there's so like I mentioned briefly before, I do think that one thing the crypto market tends to do with news is overreact to it. So like this is the kind of thing that we've seen all the time. One good example is when Elon Musk first started tweeting about Bitcoin, Bitcoin went up 10% when he sort of I forget the text of the tweet, but it was something like, oh, Bitcoin's cool, I'm gonna buy some. And Bitcoin went up 10% and then sort of dropped 9.8% in an hour after that. The market really strongly overreacts to some things like that. Yeah, so I think the market it sort of evolved a little bit in that the market figured out that it was overreacting to things like that, so it just sort of reacts a lot less now. I do think that there's the potential for a certain instances of this that are seen as quite big. So maybe some I don't know, if there's a really huge allocation by some big companies or whatever, I do think there's potential for the market to react quite strongly to that. But I do think it's the kind of thing that unless it's actually just indicating a ton of net flow, will not have a huge impact. The kinds of things that I do think can have huge impact are closer to absences of bad news than anything. So I think that the kind what we saw in the U.S. over the past couple of weeks actually is maybe some of the more impactful news that I've seen in the crypto markets, mostly insofar as their reaction to the way that the infrastructure bill played out kind of indicates to me that the U.S. is sort of viewing crypto as this thing that is worth caring about, and in particular not worth reacting really strongly negatively toward. It's not a ton ended up really coming out of it, but I think that they were taking crypto seriously and not having a knee-jerk oh, ban it reaction, which I think is sort of the absence of really bad news in a pretty important way. Yeah,
and it was interesting to see that when people were sort of absorbing the news as through a negative lens, which I thought was ridiculous. I was just happy they were talking about Bitcoin on an international stage for 3 days. But price continued to move sideways or go up, right? It was the first time that you saw news that people were perceiving as negative, and there was really no negative impact on price. And I thought that was definitely meaningful. Sam, we have a quick question from the audience. Sam, can you explain why the market is so derivative heavy driven versus spot now?
So I mean, the main reason is kind of like a stupid one. It's that people, like, if you just look at like volumes, like derivatives are just like dwarf spot volume for the most part. There's a few reasons that's possible. One, like you're allowed to get like way higher leverage in the derivatives markets than you are in the spot markets for the most part. So this has been like, I think there's like some evolution toward that getting a little bit undone with like exchanges like FTX reducing their max leverage from 100x to 20x. But still 20 is much higher than you can get in like most of the spot markets for the most part. And it lets people put on these bigger positions than they can in spot, which sort of just drives the volume to be higher. And in general, wherever volume's higher, the higher volume markets just tend to drive prices. And yeah, so that's the main reason, I think. But like over time, it's very possible that evolves somewhat. It's also possible that like if like derivatives ever become like more popular or possible to be popular in the US, that this might change, because I think that could drive people like other exchanges to have to reduce their margin limits and whatnot. But yeah, right now it's derivatives just because people can put on bigger positions and trade more, and therefore there's more volume there.
Do you guys think that we will, and Tony, do you think that we will see more derivatives action in the United States, or do you think that the trend is away from that? Sam, I know that FTX, obviously you're affiliated, but I know that they're pushing towards that. But do you think that the United States, Tone, will remain more of a spot-driven market just because of regulation?
I think it's mostly driven by regulation. A lot of people trade on derivatives exchanges because most of them do not have KYC. I know Binance is about to go the KYC route. We will see what happens with exchanges like FTX and some of the others. I mean, there's also Bybit. I believe BitMax is now doing KYC as well. So a lot of it is the non-KYC. It is because, look, we don't know where Bitcoin stands legally. Well, like as far as I'm concerned, Bitcoin has always technically been illegal. And the reason why, to me, Bitcoin has always been illegal across the board, including the United States, is that it goes against everything that the government wants. So I see, and this is one of the reasons why people are very hesitant to trade, at least the people that see it that way are very hesitant to trade on spot exchanges, because almost all spot exchanges are KYC'd exchanges. And there are other risks that come with KYC'd exchanges. So I think a lot of it also has to do with, political and legal. And also the sort of volume is like gold, for example, is completely driven by the futures market. The futures market in gold is price discovery. So all the trading does happen in a significantly leveraged way. The stock market, on the other hand, like Apple and Netflix stock, they're all driven by spot, because that's just a regulated market for spot. Eventually, these markets will probably be all regulated, and then once it's regulated, we'll see where people trade. There's a lot of gambling going on. It's interesting that a lot of these exchanges are lowering leverage from 100x to 20x, which I also think is a pretty good idea. But in the traditional futures markets, there are 100x leverages, like on oil and other assets. So this is not new. It's just better for price discovery. Price discovery still goes on in the spot market, and to me, that's the more important market than the future market.
It's interesting. I mean, talk about gold. I mean, people love to say that Bitcoin is the only market that has these leverage liquidations that affect price, but we saw a gold dump very recently when it broke a critical support level, and obviously stop lots has started firing while a lot of people are on holiday, and we sort of saw the same thing that we've seen in Bitcoin markets before. So it's really not unique to our market at all. Interesting you say you view Bitcoin as illegal. I definitely understand that perspective, but to counter that to some degree, the Paul Tudor Jones and Druckenmillers and Bill Millers of the world, these absolute billionaires, I don't think that they would gain exposure and start talking about an asset that they were really concerned would be quote unquote banned or called illegal or regulated away. And I don't think we would see the JP Morgans and Goldman Sachs's and Wells Fargo's starting to come into this space. So I understand definitely what you're saying, that like we don't have the clarity. But I guess to that end, do you guys view regulation then as necessary and something that will give people that confidence, or do you view regulation as an enemy? Sam, I guess you could take that first.
I don't really view it as either, I guess. I sort of view it as kind of it's like inevitable on some level, like the kinds of things that the discussions the U.S. has been having, for instance, about like what to do when regulating crypto. Like it's not like this is just sort of always going to happen. This is what the U.S. always does, and yeah, I don't like. I guess I don't. It's not like. I think that it's important that it happen in order for instance, like any sort of like derivative platforms to be allowed to like operate on a wider scale in the U.S., which is also important for the global market. And yeah, so I do think it's good because once there's like clarity about what's allowed, people will not have to operate in the dark and like be worried that literally everything's not allowed. So I think that's good because I do think that there are institutions that are like being overcautious, or like maybe not overcautious, but more cautious than they would be if there were specific guidelines being given. And yeah, so I think that that's good. Yeah, I don't like that said, like there's some extent to which like if there were no regulation, then there'd potentially be more opportunity, but like that's not the world we live in, especially as the US is concerned just historically. Yeah, so I think it'll be good like in terms of like giving people what the rules are so they don't have to follow rules that don't exist. And yeah, I'm looking forward to seeing how things shake out, I guess.
Yeah, I mean, it's my position that institutional money is at least interested now, right? I mean, we've seen them pouring in. You can't tell me that this huge wall of money doesn't have their risk managers looking at this asset and considering it. So the question is it a matter of the regulation that we, to see endowments and pension funds and the really big wall of money, or is it something like an ETF that gives them an asset where they can gain exposure to it without having to worry about, custody or any of those things? Tone, what are your thoughts?
I think the average retail investor just wants simplicity. I think the ETF should already exist.
Sure.
The GBTC is like a de facto ETF. It's just not ideal. So an ETF is badly needed. But at the same time, an ETF is like, it's a double-edged sword. In a way, I want to see the ETF because I know it'll raise the price of Bitcoin as there'll be huge demand from the retail investor. But at the same time, we already have so much Bitcoin locked up in government institutions, especially U.S. government institutions, between how much Bitcoin sitting at Grayscale and how much Bitcoin is sitting at other places like Coinbase, like Gemini, Fidelity. And to me, that's a huge risk. It's not a risk next year. It's probably not a risk the year after. But going into the end of this decade, I see this as a huge risk. I see a repeat of the 1930s when FDR confiscated all the gold held by all the banks on behalf of all the people of the United States. And this is, to me, this is the biggest threat to Bitcoin, like 20% of all the Bitcoin sitting in government-controlled institutions. And the path that I see the United States going on into the rest of the decade is not pretty. I see a potential breakup of the United States. I see a potential, like default on all the debt. I see the collapse of the US dollar as the world reserve currency. And as that's happening, the government will have only one thing left to do to save itself, and that is to confiscate the Bitcoin from these American institutions that are holding Bitcoin on behalf of the people. So this is why I strongly advise people not to buy into these products, learn how to use Bitcoin properly, and hold your own keys because it's the only thing that will save you. But at the same time, I'm not against the ETF because I know it'll make the price of Bitcoin go up.
Yeah, I mean, I certainly don't think that an ETF could hurt. Sam, what do you think?
About
any of it?
What?
Have at it.
Yeah. Yeah, I'm not sure I followed all of that. I think that yeah, like I agree that like once the regulations are a little more clear, there will be like a sort of more like a more like fungible with Bitcoin ETF. I think that will be helpful for a lot of the like sort of traditional firms which have these like strict risk limits that they're not allowed to like operate outside of. Because for like people who don't know, GBTC's like redemptions don't currently work. And so I think that
negative 16% today. I think negative 16%. I think they're
discounted.
Oh yeah,
if redemptions worked though, that wouldn't be the case. Just because like you get a sort of arb it out immediately by buying it and redeeming. Yeah, so like once like I do think that once regulations a little more clear, like something like that will exist, which will help some companies that like need to like be trading something that's regulated like an ETF is. Which will give people like exposure that they might want but can't get right now. And yeah, I think that'll be a good direction. But yeah.
Yeah, I mean, to me, I think that that's where we see, whether you cheer it or not, when we see the institutional money just absolutely pouring. Like Tone said, I mean, we know that will make the price is going to absolutely skyrocket when that does happen. But I guess if you're looking down the road, and it's something we talk about all the time, it's kind of an irony in this community, I think, is that you have this sentiment of, short the bankers, long Bitcoin, the sort of maximalist feeling, the fuck the system, burn it down. But then we get really, really excited when we see a big bank come in and start buying Bitcoin because it makes the number go up. Do you think that those are conflicting things, or do you think that it's rational to have both of those feelings?
Yeah, I think it's there's an extent to which it's rational to think both of those things. I guess I want to isolate one piece of the like excitement about like seeing like a few companies like big institutions in the US start buying crypto. There's like the first order thing where you're like, oh, like these companies are buying crypto. That means there's going to be net buying. That means that the price should go up, because like that's what's going on in any market. And like when the price goes up, it's because there's more buying than selling, which is like stupid to say, but like that's like the literal effect going on. And to first order, seeing someone say they're going to be buying Bitcoin means like the number might go up. But like the second order effect is it sort of tells you that like their lawyers told them they were allowed to do this. It like can correlate really strongly with other companies doing it in the future. And I think that's the like actually more exciting thing on some level. Is not the set of companies who've already decided to. It's the potential that this means that like 100 times the number of companies that have might. So like that's the kind of effect that I think is like a little bit more indicative of like what the price should actually do. And like it's not guaranteed, of course. Like maybe there's like some set of like very like risk-taking lawyers who allowed this to happen, or like not just lawyers, but risk teams. And so like nothing's guaranteed ever, but it does like seem to speak to the expected, like some sort of expected set of behaviors in the future that seems pretty plausible to me.
Agreed. First, I want to say, everybody in the audience, if you guys have questions, you can pose them to me and we can ask them to the guests. That would be great. So actually, to what you just said, when MicroStrategy bought last year, obviously it's been just over a year now, that obviously sort of sparked the sentiment of institutional adoption, not bank adoption, but companies viewing it as a treasury. We saw Tesla, they had this huge meeting, Michael Saylor, with 2,000 companies in February. And there was speculation, or at least a feeling, myself included, that we were going to see this just flood of companies adding Bitcoin to the treasury. And then it sort of never happened, right? And we thought that a lot of people would follow their lead. Do you think that it's still too early for a lot of them? I mean, why do you think that we didn't see that follow through? Because it seems like there was tremendous momentum there, Tone.
Oh, I just think it's bad timing. When Michael Saylor came out, I mean, the price of Bitcoin started to go up, but with the company, you have a board of directors and a lot of them are older. So it's not like you can say, wow, okay, I decided to buy Bitcoin, let's do it tomorrow. I mean, this stuff takes time, and it usually takes about 3 to 6 months to get your idea to buy Bitcoin for your company cleared by the board. And as that was happening, the price of Bitcoin is falling 50%. So I'm sure it put a lot of that stuff on hold. But now that Bitcoin is pushing back up to all-time highs, I see a flood of companies buying into Bitcoin later this year because now they have probably already gotten all that clearance, and now they're waiting for a good time to buy or for final approval. So I think that is coming very, very soon.
That makes sense. So there's a few people have asked about Ethereum. So thoughts on Ethereum and where it could go this cycle. Sam, you like me, I know you don't like to make grand predictions, but maybe we can just talk generally about the relationship between Ethereum and Bitcoin and, whether not specific to price, but obviously we're seeing more adoption of Ethereum. In my opinion, it's actually the better trade, kind of has more upside. So I'm curious your guys' collective thoughts on Ethereum here.
Yeah, I wouldn't say similar to really anything. Yeah, I don't have any specific ideas about like the like longer term price action or whatever. I do think that so one thing about altcoins in general and Ethereum is sort of like somewhere in between the way Bitcoin works and the way altcoins work from a market structure point of view. But in general with altcoins, the liquidity tends to be like somewhat lower than Bitcoin's, and especially the ratio between like open interest of derivative products and liquidity tends to be higher for these products, meaning that there's like more open contracts than like the amount of liquidity on the book relative to what Bitcoin has for that same ratio. And the effect that has is that when there are these like momentum effects, like when there are a bunch of liquidations in the markets, it tends to be way stronger. So when you look at something like Dogecoin, just to pivot off of Ether, but I'll come back in a second. When you look at something like Dogecoin, its price sort of goes up for days and then down for days, and it's a really strong effect where it like just like moves really really a lot in one direction before undoing itself, and that's because of these liquidations that happen in the market, and the liquidity is very small relative to the size of those liquidations. Which can like sort of just make like force these cascading sets of liquidations that can last for like a really long time, and especially in price terms. And that's like not true in Ethereum, but it is like a little bit more toward that. Like it's like if you look at like Bitcoin to Doge as a spectrum, Ether is a little bit to the left of Bitcoin. It's like pretty close to Bitcoin, but it's a little bit less. So yeah, there's a bit more momentum in any of the altcoin markets, and that's a little bit true for Ethereum, especially as you get to local peaks, which we kind of are at, or like we kind of like have been near one for Ethereum for a bit. And so yeah, short term, basically like we'll put on more momentum-y trades for these kinds of coins. But yeah, we don't view it as that different from Bitcoin. If you like run studies on them, like Ethereum moves with like a pretty close to a 1 beta to Bitcoin.
Sure.
Correlation is quite close.
Yeah.
So like from the point of view of someone who's like just sort of trading these things like mostly short term, they're pretty similar.
Yeah, Tone, I know you're not a huge fan, but you can address it if you like.
Yeah, no, I think Ethereum is like miles left, not just a little bit left. Ethereum is very left, and also Ethereum to me is basically a socialist system where they just have committees to decide whatever they like. It's a totally centralized system. To me, Ethereum is about as interesting as Doge. I don't see any real innovation there. I don't see anything substantial there. People are speculating on Ethereum. People still build a shit ton of scams on top of Ethereum. And that's fine. And that can last longer than most people would stay liquid. I generally stay away from Ethereum. I have no idea what's going to happen when they try to remove their miners. At the moment, I see their mining system as the only fraction of decentralization their entire project has. And obviously, because there is a fraction of decentralization, that fraction needs to be totally removed so that the maintainers of Ethereum have absolute control. Other projects saw the problem with mining decentralizing their system from the start, so they never adopted mining. Cardano was an example of that. You want to have a more centralized project, don't have mining at all. And to me, these projects are just not interesting, and they are all competing with each other for other tokens to build on top of. And meanwhile, the liquid sidechain of Bitcoin continues to just slowly and slowly and slowly get stronger until eventually it will absorb all of those tokens on top of the other blockchains, and it all will come back to Bitcoin. May take another decade, who knows? But that's my view. I think Bitcoin is the only sound investment in the space. I don't think any of those other projects should have their own money. It doesn't need it. They are centralized entities, no other than Amazon or Google, and you are welcome to have publicly traded stock of your company, which is where they all eventually end up. So we'll see where it goes.
Yeah, Amazon and Google are still good trades. And what I found really interesting and just telling for the moment, and I agree with you, it's not a long-term lens thing. I was actually pretty shocked when I saw Coinbase release their Q2 and that Ethereum trading volumes were higher than Bitcoin trading volumes in Q2 on Coinbase.
Right, but
I found that pretty surprising.
Right, but Ethereum, but it's also like you don't have to pay those transaction fees to move Ethereum around, and no one is really moving much Ethereum around. Ethereum greatly benefited by a $900 transaction fee because it turned a lot of the Ethereum users into Ethereum hodlers. And the Ethereum token was never designed to be hodled. It was designed to be used. So Ethereum just has all of these contracting, like just conflicts of interest between each part of Ethereum. You ask, 5 different Ethereum developers, what is the Ethereum token? And you're going to get 5 different answers. Because like some people see it as money, some people see it as a store of value, some people see it as a currency, and then some people see it as gas meant to be used and destroyed. They're actually destroying Ethereum right now. Just like some of the moves by their centralized committee make absolutely no sense. But hey, when you have a centralized committee that can do whatever they want, they can just do whatever they want. That's why the project is just not interesting to me. And if I'm going to speculate, I'm going to speculate in the traditional markets with companies that I understand and companies that have clients and projects and provide net positive value to the world is what I like to trade.
So Sam, there's a question for you, I believe. In terms of probability, what are the odds the current institution interest will be FOMO and take us beyond all-time high soon versus their allocations being slower and limit bids instead of market orders? I guess the question there is how will institutions buy when they come in?
Yeah, it's kind of hard to say. I think that in general, like the way that a lot of these institutions are, will tend to enter positions is a little bit more conservative than maybe like the crypto market is sort of used to seeing. I think that like a lot of them are going to be like using OTC desks, for instance, to like sort of TWAP and do a position slowly, and yeah, that's sort of like a lot more standard in like traditional finance anyway. When like a fund is putting on some like longer term position, they don't just like send a market order or something. It tends to be over days, especially for like larger positions. So yeah, I think that like to the extent that institutions put on positions, I just think that's how it tends to look. So that's what I would expect to see. And you probably wouldn't even like be able to tell that it's a large position being put on just because they'll put it on so slowly. And like, for instance, like any OTC desk has like the capability of putting on positions like over a very long period of time to minimize impact. And that's what you'll see.
Right. I mean, MicroStrategy, he shared his strategy, right? And it was like 60,000 small bids to get their first orders in the books. But that said, is that like an indictment of the Bitcoin market that it's still not big enough that someone can just come in and get their money into it? I mean, that's exciting for traders, obviously. But do you think that then that shows us that it needs to be much bigger, much higher market cap for the big money to really come in confidently and know that also it'll be liquid if they need to find the exit?
Oh, no,
they feed off each other. As more companies and bigger investors buy in, the value of Bitcoin goes up, and it prevents other big players from buying more. So it's a self-feeding organism that regulates the whole market. And I do think that once we get closer to the all-time high, once we start breaking that $55,000 area, I think it can really take off. Not to mention GBTC and Grayscale can come back into the fold. No one has bought into Grayscale in over 6 months. So that means there are no more periods where GBTC opens up for sale. And as the price of Bitcoin starts to reach all-time high, retail investors are going to start buying GBTC again. So Grayscale is going to come back to buying more Bitcoin into the trust once that premium goes back to positive. And I do believe that premium will eventually go to positive. Now, if an ETF comes out before that, then the premium will never go positive. It will just get to zero and oscillate somewhere around zero, not going to much more. But I do think it's coming. And once we break the all-time high, I think we're going to accelerate really quickly based on all those factors, including institutional and corporate buys.
You're talking about GBTC. If you believe it'll go positive to both of you, does that mean GBTC is a really good trade here at a 16% discount?
I believe so. This is my, I have a pretty high allocation to GBTC right now in my Roth IRA retirement account.
Yeah, buying GBTC is sort of not even really a bet on Bitcoin exactly. It's specifically a bet on the premium movement. And yeah, like Alameda has seen opportunities as the premiums move around. It moves around quite a bit. It's sort of been between negative 5 and 20% over the past couple months to spot Bitcoin. And yeah, you can there are short-term trades you can be doing by betting around these premia. Longer term, it's sort of unclear what's going to happen there. It really depends on whether they open up redemptions. If they don't, then there's not really a reason for it to ever not be at a discount. But because it has a yearly management fee that's quite high actually. So yeah, we'll see. But
it's a bad product. I mean, it's a suboptimal product, obviously, if it's swinging that far and with the fees. But when it was trading at that tremendous premium for basically all of its history until February, that kind of was the institutional trade for a while, right?
Yeah, totally.
And I mean, a lot of people conjecture that's why BlockFi obviously ceased to be able to offer yield, because that premium disappeared. So what's the trade now? How do companies like that offer yield when the GBTC is the core of it and that premium disappears? Either of you have a thought on that?
Yeah, I mean, there needs to be a framework for them to be able to hold spot Bitcoin for the most part.
Well, is it things go out of backwardation back into contango and the cash and carry trade becomes the core of the way they do it? I mean, I'm just curious, how is that what would be happening?
That's one thing that can happen for sure. That's something that we do see going on, and not exactly on an institutional level, but that is a trade that people have sort of been putting on forever. And yeah, so that's one option, and I do think that there are some companies that are doing that. And yeah, that's sort of the kind of thing that you see in other markets as well. So yeah, that's possible.
Yeah. Tone, any thoughts or?
Just time. You just need time. I mean, there was overbuying of the Grayscale Trust, so there is a lot of extra GBTC floating around. That's what's creating that negative premium. Eventually, it'll get bought up. I mean, demand for Bitcoin is increasing every single month, basically. Even in this downturn, we're seeing more and more people interested. And anytime an asset breaks an all-time high after a prolonged absence of 6 months or so, the probability of it going higher is huge because of the FOMO. So I think all of that is coming. I just think maybe another month or two is needed. And I think towards the end of year, everything is just going to line up, and there's not going to be that much Bitcoin going around. Not to mention all of the Bitcoin that was sold by the Chinese miners moving their operations. I mean, that's also pretty much over. The hash rate's coming back. Right now is the time where miners are going to be hodling their coins because it's also hard to buy new equipment. There's just not enough to go around. So what do you do with the Bitcoin? You just hodl it. And Bitcoin has been coming off exchanges. There's just less Bitcoin out there to buy. And I think all of this is about to just break open with buying opportunity, with buying FOMO in the very near future this year.
Yeah, I mean, perhaps I don't have a wild enough imagination, but it seems like we've absorbed the negative news cycle, and if we just saw a potential threat to the crypto industry in the United States and an infrastructure bill and that didn't move the market, I'm trying to imagine what kind of negative news could possibly be impactful at this point. I have no idea. I don't know if you guys have any thoughts, but I think that if we're not moving down on negative news, that even if we don't get any tremendous positive news, we could just continue to float up.
Mm-hmm. Yeah, I think that if there are legitimate regulatory actions that are taken to actually try and prevent people, for instance, Americans from operating in crypto, then that could be bad. But yeah, it seems fairly unlikely at this point, just based on some what has already happened and sort of some precedents that they've kind of established. So I think that in theory, that's the kind of thing that should bring the market down. But I don't think that will that specific thing is likely to happen. I do think there are some things that other countries' regulatory bodies could do, which again, in theory, would be fairly bad for crypto. There's sort of the meme about China saying they're going to ban Bitcoin, but never actually doing anything. I mean, China could do something. It's technically possible. And I think that that could be fairly bad. But yeah, at this point, it's not seeming especially likely there'll be like legitimate bad regulatory news for crypto, at least from the major markets, which is what matters most, of course.
Yeah. Tony, you have any thoughts on that?
No, pretty much.
China is so funny to me because it shows the news cycles, because China, obviously, on the way up, when price was rising, people would say the biggest threat to crypto is centralization in China. And then when China, quote unquote, bans Bitcoin mining and becomes more decentralized, apparently that became bad news, right? And I think that anyone who understands long-term would say less control in China is good, right? I mean, on a very basic level. So I wonder what else China can possibly do here. And this time, to be frank, I think that the mining ban to some degree will stick. I think the guys who leave and put their miners on, cargo planes and fly out to other countries don't come back this time, because they see what can happen if the government changes their mind again.
I really did not like that mining ban by China, and I thought it was stupid that people kept saying Bitcoin is centralized in China because that's where all the mining is. I like the fact that all the mining was in China. If China had 65-70% of all the mining, I was actually happy about that. To me, it helped decentralize Bitcoin on a bigger scale, because the Chinese were just mining. The Chinese do not have any core developers, so they're not contributing to core development. Almost no one is running a node in China outside the miners. So the miners could not actually collude and do anything, because the node operators like myself would not accept their collusion. So to me, the system was always more decentralized by the massive mining in China. Now that so much mining has moved over to the United States, I see it as a little bit more centralized for Bitcoin, with miners and core developers and most node operators all in the West, United States, and partially Europe. So I wasn't happy about that at all. Not to mention, China set a precedent saying that, hey, we can ban mining and we can get rid of all you people. And the U.S., some of the U.S. congressmen are now thinking the same. Hey, if China can do it within a month, all we have to do is pass a law to ban Bitcoin mining, and we can cause all this kind of havoc in the Bitcoin space by kicking out all the miners. So to me, I never bought into the FUD that Bitcoin was in danger by having all that mining in China. And I think now things could be a little bit worse, and they could cause havoc by banning mining. But now there are public companies that are mining. So it becomes, who's got the more lobby money? As Bitcoiners and Bitcoin companies become wealthier and wealthier, they become the de facto government, or they become the de facto lobbyists of government for more favorable laws. So we'll see where it goes.
Guys, we have about 8 more minutes left, just so you know, anyone, if you have any kind of final questions and thoughts here. Kind of interesting, the news came out, you're talking about publicly traded mining companies. It came out today that BlackRock has about 400 million in, I believe, Riot and Marathon. That's a pretty interesting way for institutions to gain exposure. To me, the mining stocks are almost like a leverage play on Bitcoin, because they have so much more volatility based on the price action. But in lieu of an ETF, it seems like those are ways that institutions are definitely finding exposure to the asset without having to actually buy it. I'm curious, before people start asking more questions, do you think that 7-figure targets for Bitcoin and no time frame, 10 years, 20 years, do you think that those are hyperbolic? Do you think it's possible, or do you think that that's just more excitement and FOMO?
Without a lot of inflation, I believe that's fairly impossible. That's based on
based on market cap.
I take the other side of that. $1 million Bitcoin by the end of this decade with zero or negative inflation is absolutely possible. Bitcoin doesn't depend on the government printing money. Bitcoin has properties without the government printing money. To me, the 21 million cap, which is the inflation play of Bitcoin, is the third most important property of Bitcoin, with the most important property of Bitcoin being unconfiscatability. Again, going back to the current political environment, the moment people can actually move out of their region, if they can, these vaccine passports are going to make it challenging. The governments are not going to want them to move, because they want their tax revenue. Most countries will probably put in global taxation plays. I mean, Bitcoin is the only way to protect your wealth. And I think that is the biggest aspect of Bitcoin. And you don't need any inflation for that. Like if your government decides to, make your life a living hell and you want to leave that area. My family fled communist Russia and we were only allowed to leave the country, never to come back with $100 per person. This was, of course, back in 1990 where $100 would buy you more, but not that much more, right? Like relatively speaking, and it didn't matter how much wealth you have. So wealth preservation is Bitcoin's #1 property, and that property alone is enough to take Bitcoin to $1 million by the end of this decade, regardless of what kind of inflation is happening.
Well, inflation doesn't matter because right now that is 1/3 of the world's GDP, and that's not realistic.
You mean the market cap relative to a $1 million price?
Yeah, so if I were $1 million, Bitcoin's market cap would be 1/3 of the world's GDP, and that's not especially realistic.
Well, I guess the inflation argument is that will rise, but it would still be a pretty large percentage.
GDP would have to go up in dollar terms for that to be realistic.
Yeah, that makes sense. So listen, I get this question all the time. Sorry. How high is the level of manipulation in Bitcoin markets? Whales talking to each other to define price action midterm. So I always laugh that people think that this market is the manipulated market when obviously the stock market is completely inflated by the Fed and money printing. And I always make the argument that Bitcoin is a free market. And the very fact that whales can move the market is just a function of a free market. But do you guys... obviously, I mean, Sam, you guys are market makers, right? You can be defined as whales. Is this something that people need to be concerned about? Is it a function of what happens in this market?
Yeah, I think that people will probably underestimate the extent to which people who have who doing a lot of trading in the markets treat themselves as though they are being regulated. I guess we're very conservative in a lot of ways, just from that point of view, and. We don't tend to find that we'd even have incentive to do anything like this in the absence of that. But given those sort of concerns, we certainly would never do anything like this. Talk to any other firms about trying to move the price in any specific way. Yeah. So this, there's definitely there exist bad actors for sure in any space, like you said, But I don't specifically think there are a ton of people who are trying to do stuff like this. If you you have to be looking at what incentives be for this kind of behavior. And in general, people imagine that maybe you try and price up so you sell higher, or vice versa, or something like that. And that is something that we have seen people try to do. It is quite unlikely that someone's doing that successfully and making money at it. You pay a lot more than I think you might guess. In execution costs and trying to push the price higher, because the thing is, unless you have a ton of money to devote to that, you're gonna fail. And
the risk reward is terrible.
Yeah, this is just the kind of thing that doesn't work for the most part. People will sort of have these narratives about what's going on in the market, but the narratives tend to the proposed narratives I often hear just wouldn't work, which is sort of the funny thing to me. Yeah, so I don't think this really happens on a large scale. Definitely people try it, and it's not literally unheard of. But yeah, the biggest firms who are doing the most volume can't be relying on this to make their money. They would go bankrupt.
Yeah, or you would get in a whole lot of trouble when the regulation does come in. True.
Or both.
Tone, yeah. Tone, do you have any thoughts on the nature of the market and the whales?
To me, the word what do you call it? The word manipulation is grossly overused. I don't care if the guy has more money and can move the market. I mean, it's still a free market.
It's a free market.
He's playing by the rules. It's you get these people. It's you sit down at a poker game and one guy has 3 times more chips and somehow he's manipulating the game. I mean, no, he just has more chips. You don't have to play. He has more chips or have more chips to play with. So the kind of manipulation people are saying, it's usually an excuse people use for their bad trades. And a lot of people saying gold is manipulated. Insiders take advantage of gold. They can skim pennies. Okay, sure. I mean, someone can manipulate the price of gold by about 2 cents on an average day. And if they have enough contracts, they can make 2 cents. But there is no, decade-long suppression of gold prices. That is just insane. That is just bullshit that some gloom and doom newsletter writer is telling you, so you buy more of his newsletter to explain why he's been wrong for a few decades. So are there bad actors that have insider information from the exchange or whatever that can take advantage of the information? Sure. But if you think the Bitcoin price is manipulated, then everything is manipulated. And why are you trading it, and why does it bother you? I mean, trade assets that are most liquid, and there's no manipulation there. And this is why some regulation in the markets is needed in order to make sure that insider players are playing by the rules. As long as everyone has an equal playing field, don't be mad at the guy with more money than you. Yes,
yeah, I agree with that.
Field around until a guy with more money comes in.
I mean, you have the opportunity to be on his side of the trade, right? So there's nothing preventing you from choosing the right side of that. Guys, we're out of time. So, Sam, where can everybody find you and follow you after this, then Tone after?
I mostly post on Twitter. Twitter's Alameda Trabucco, probably written down somewhere. I mostly just post like my thoughts about like how to think about trading, and like it's mostly short-term and quantitative stuff. But I post a lot there.
Tone, where can everybody find you and check out what you have going on?
Pretty much everything is under my name, Tone Vays. Tone Vays on Twitter, Tone Vays on Instagram, Tone Vays on YouTube, where I do daily videos covering the price of Bitcoin. The other half of my world is educating people about Bitcoin, that's independent of trading. We have an event coming up in Dubai called Understanding Bitcoin, understandingbtc.com, where we teach people about securing their private keys, how to make private transactions, how to run a node, panels, and a couple of workshops on that happening in Dubai. There's also a financial summit coming up in Ras Al Khaimah, also in UAE, right next to Dubai, where traders and hedge funds come to network. So that's the financial summit. You get everything from tonevays.com if you check that out.
Thank you guys so much for having this conversation. Really enlightening. Thank you everybody for watching and for asking questions. I'll be back at the same time roughly on Monday. Till then, guys, peace.
That's dope.